let's finish our discussion on this 15-minute chart and what that 3-bar initial trend reading tells me. So we've segued into the power stats to get a better idea of what the pair may do, how it may behave at this hour of the day as prices are trying to potentially move lower on this time frame. I can get an idea of the pip movement expectation by looking at the power stats, but let's come back to this initial trend and why I love it so much. I'm not expecting continuation, and I'm not expecting momentum higher with a 3-bar initial trend because it's indicating a sideways market. A sideways market means a 3-bar initial trend means a narrow sideways market, low volatility. So am I going to expect just a drop? No, not at all. In fact, what I'm going to expect is this thing to trickle sideways at this point. So with a 3-bar reading on a channel up, I'm thinking more along the lines of either a stall at the support, and if the support is broken, a reversal, but still a fairly quiet sideways range. So while the channel up has been reversed, when the uptrend line, the backbone of the pattern was broken here, okay, the 3-bar initial trend reading is telling me there's probably not going to be a lot of volatility. Again, it's a suggestion, it's an indicator, okay? It's probably not going to be a lot of volatility, but this is indeed a break, a transition from what was a markup cycle on the 15-minute chart to a sideways market. 1 to 3 bars indicate accumulation. 1 meaning a very, very quiet tight range. 3 would be the most volatile accumulation that we can have until I go to that 4th bar in the initial trend, and that's officially now distribution. Make sense? Let's grab another pattern. We looked at a 30-minute, a 15-minute, we looked at an inverse head and shoulders, a channel up. How about we take a look at a triangle? And here's one of those scenarios where, see in close proximity, I got 2 15-minute alerts. One was a sideways pattern and one is a trending pattern. Interesting, right? Let's take a look at that triangle. The triangle pattern, again, this happened some time ago. You can see the price move that's happened since. The triangle, as you can see here, broke higher. 2-bar initial trend. What is that 2-bar telling me? Well, as this pattern was developing, we were in a sideways, narrow-ranging cycle. Perfect for the narrow area of a triangle. In fact, triangles tend to start off with a wider range, which can be considered sometimes a weak trend or even distribution, most likely distribution, but sometimes, again, a weak trend. And then as the triangle squeezes prices, the range narrows. And as the range narrows, we continue to transition from the sideways distribution into what is typically accumulation as we approach what I call the narrows of this pattern. There's always going to be a narrow area of a self-limiting pattern. Self-limiting meaning if the triangle did nothing more than move sideways, at some point, because the pattern is coming to an end, it's just going to squeeze prices until there's nowhere to go. Wedges do this, pennants do this, triangles do this. Okay, they're self-limiting. At some point, prices are simply going to run out of somewhere to go. But before this broke, we were in a sideways 2-bar range. In a sideways market, I'm not going to have a bias. Just as I didn't have a bias before, I definitely don't want a bias in a sideways market. I know the overall direction is down on the euro-US dollar, but that does not mean I could not get a short-term reversal, which is exactly what we had here, a buying opportunity. Let me show you this other chart here, because I believe this triangle is going to be, no, I thought it might be the completed pattern of this 20-minute, but it was not. So, thought I'd check. By the way, for those of you that want a little bit more trade management, once the pattern is broken and you want to say, okay, where are potential levels of resistance or support once the pattern is broken support or resistance, the complete pattern section actually gives you that. It's where you'll get 2 readings. The breakout, which tells you how much momentum accompanied the pattern break, and it will give you the forecast area, which is this shaded area, which we would typically call a profit target or a target, right? But really what it is resistance, right? This area between 2470 and 2580 is resistance. So remember, the PRS gives you an indication of how to manage the trade once the pattern is broken. So this triangle, again, had that 2-bar range, perfect for what I would expect if prices were truly accumulating or really consolidating tightly before the pattern broke, and we broke to the upside. And had some decent follow-through for a short-term 15-minute chart. By the way, if I'm also trying to assess what type of movement I could get once the pattern breaks, depending upon the time of day, the pair, and the day itself, can I go over to Power Stats and get an idea of what the price movement may be per hour and what potential support or resistance might be? Absolutely. Absolutely. That's analysis I can do as soon as the pattern triggers. Especially the expected price range. That's where you can really get a lot of insight once a pattern's broken as well. I'll use the expected price range not only to gauge the likelihood of a certain time frame reaching a certain price, whether that be an entry or an exit, but again, you can use it from a trade management standpoint, focusing purely on the exit, whether that be your stop loss exit or your profit target exit.